Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joyce, managing director on Nasdaq's market intelligence desk, for an update for technical update on the Nasdaq 100 index as Treasury yields dip and the Fed is staying the course. Brian, it's great to see you as always. Welcome back to Trade Talks. And it seems to be that the market has digested the news, well, actually the non-news with the FOMC yesterday, but it really seems to be these Treasury yields dipping is providing somewhat of a boost to the market.
Yeah, we've seen over the course of the last 2 or 3 months, financial conditions really start to tighten. There's a Goldman Sachs Financials Index, Financial Conditions Index. We could see that was really trending strongly higher, almost to the highs of last year, driven by the move higher in yields, the move higher in the U.S. dollar, and then the 3-month decline in equities. So that's beginning to unwind, given, as you noted, the yields have pulled back the last couple of days.
And let's take a look at technical levels in the Nasdaq 100 because it is actually up for the quarter, and it's actually outperforming relative to the other indexes.
Yeah, it's the top performer this quarter. We're up a little over 1%. For this week, however, we're up more than 5% this week. We're the top performer as well. When we look at the Nasdaq 100 here, we could see that it was the only index that was able to hold above its 200-day moving average. The S&P, the Dow, the Russell 2000, the microcap, everything had traded below its 200-day moving average. The Nasdaq 100, basically touched that 40-week moving average, which is synonymous to the 200-day. That's the yellow line right here. And this week is now bouncing firmly higher. If we look at the daily period chart here, we could see that it's now up against its 50-day moving average. So that's beginning to trend down a little bit lower here. So we'll have to wait and see. That would call that a minor resistance right now, 14,946, and then just above it we have the recent high from mid-October at 15,333. So those are the near-term resistance levels I would focus on for the Nasdaq 100. One of the big drivers of that index is the Magnificent Seven, which we've been highlighting recently. And we did see a brief breakdown from a 4-month, I should say, sideways trading range. So for 2 or 3 trading sessions over the last week, we had a breakdown and then a quick recovery back above it. So that's a good sign. More broadly speaking, the Russell 2000 this week is bouncing off, last week's lows, which was equal to the lows from June of last year and October of last year. And so that's a key support level for the small caps, which have really been the worst performers this year. And going back to the larger caps in the S&P 500, that also is bouncing this week off of a support level that had really been in place since the first quarter of 2022.
All right, and let's take a look at the 10-year as well. Really, I mean, this is what the rally is based on, it appears to be today. Of course, we have seasonality as well. Seems like it's, it's stepping in here right on time.
Yeah, so we made a high in the beginning of October around 4.88%, and then we had a brief consolidation, and then on the next push up after the September, it was well after the September FOMC, but we made a new high up to 5.02% early last week, and on that move up, we saw waning upside momentum as indicated here by the daily RSI. Very similar in the weekly period RSI as well, where we had a bearish divergence in the upside momentum. So with this week's news from the Fed, they kind of basically stayed the course, but we had some releases of the quarterly refunding announcement on Monday by the Treasury, and yesterday the Treasury came out with its composition, which was net. What that told us was Q4 and Q1 supply of long duration Treasury bonds or notes were going to be lower, and so lower supply that would give a bid under the price for treasuries, which means lower yield. And so we've seen that. We saw a 40 basis point decline from the high of last week at 5.02 to today's low 4.62. So we'll wait and see how much of a pullback we see further from here. Even if we can just go sideways in long yields, I think that would be a net positive for equities. Wouldn't surprise me if we get as far down as 4.34%, which was the high from October of last year. But then we had this, long 10-month sideways consolidation, 100 basis point range, high to low. So longer term, I would expect that, we have the potential to get up to 5.35%. In the near term, I would expect that we could, probably test this 50-day moving average, which is about 10 bips below here, 4.54%. And even if we get further below there, I think you have much bigger support down at 4.35%. With the lower yields, we've seen, a nice rebound in rate-sensitive groups such as regional banks. We've seen them, up over 5% today. The home builders, they're rebounding from their lows this week. They're up more than 10%. And so in technology, we're even seeing, a rebound there also. So the, technology is a lot of times characterized as a long duration equity group. And, they're moving and they're back above their 50-day moving average already. So, we're seeing some, very strong breadth, improving breadth and strong performance, particularly since, the announcement yesterday.
All right, Brian, appreciate the technical insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.